Hello everybody, Brian here again from quantlabs.net. Just wanted to update about this current strategy we're testing. Huge impacts I'll show you on profit, P&L from the testing, back testing. So in here in this article I just posted on my blog, download files, pair trading short, long short for forex, crypto, algo trading bot in that particular algo. I've given you all the resources in the previous video. Here's that video. I've also updated the charts with a prior session. These right here are set at for the fast average at 50 and 60 for the slow. You can see that there's profit potential with those parameters. Okay, all you gotta do is just look through this file right here. So what I did was the average or the parameters for the averages make a huge difference. So in here, when you go through the P&L on these same data, it's slightly different. You can see here on the exit that there's a lot of negative or losing positions here. So the fast was set at, I believe it's 6. And the slow is at 24 because it's early data. So that makes a big difference because you can see it here in the losses. Also, I just want to show you the new charts as well. Let me just show you the PNG or the moving average in the PNG file. Once it's opened up, here you go. So these are 1,000 data points. This might be too little apparently, needing quite a few thousand to get a better co-integration p-value. So the max I can get is 1,000 out of the broker, which is Oanda. So unless I log it all the time, this is the best I can get. But the co-integration is debatable, I guess, at how many you need. The other thing is the Z-score. So I'm going to try to just interpret what this means. So these are the signals right here. So as we said, this is trying to be mean reverting. Again, I'm just testing the data here, but we still need to figure out what the parameters should be. Again, it is hourly data we're dealing with, 1,000 data points. So it may work as a fast average of 5 and slow at 60. That's what it was initially set at. And this has the hindrance here and here because these are parameters. So when the price, now remember, this is the ratio between the long and the short. So in this case, the long, I believe, let me just see if I can find it here. The long and short, if I can find it. Okay, here we go. So here's the table of the co-integrated, I guess not. Okay. Well, let's see. Yeah, here I could probably find it in the long and short because that's the same. So LSTXT. So this is the one I just uploaded for you all. Here it is. So if I go down here to the co-integration part, let's see. But that is what is kind of needed to figure out the parameters, and here is what I'm referring to right here. So these are the pairs with the co-integrated. Now, from what I understand, potentially this is past co-integration p-value for the 1,000 data points compared against these two. Now, when I say the price ratio, when I say this right here, this blue line, that's the price ratio. And that's the ratio between here and here. So the long is your euro against Swiss franc and the pound against the franc. That's your short with this co-integration, and if it's less than 0.05, chances are it may be co-integratable. So that's the metric that was to be used. So when you go back, when this was generated, the time, again, for the pair, in our case, is the long versus short. We have more longs than shorts for this pair, euro against the Australian dollar. So that is that's using the same ratio, but up here, let's say, which is the weakest ratio between the long and short, Australian dollar against the Japanese yen, there's definitely a lot more shorts than longs for this pair, and so on. So what I did was, as I said earlier in my past video, I take the metrics of the three strongest and the metric of the three weakest and co-integrate them against each other, and these are the results right here. So as I said, the one that may have the best in this lot that co-integrates is the euro franc as a long, and the short pound against the franc. So that's what we're calculating. And again, this is current and past over the 1,000 data points. So you may need to figure out what the p-value will be moving forward. One way that was suggested is to use some kind of machine learning to predict it, or applying a Kalman filter against the same data and apply to get the adjusted, I guess, p-value for potentially the future. So that will tell you if it's co-integratable moving forward from when this is generated, because that's key as well. Because this changes quite a bit on even an hourly basis. So you need to make sure when you generate it that it is still co-integratable, because it'll mess everything up. So that is very, very important. Other than that, so let me go back to the charts here. So going back with the blue line, this is again that long versus short ratio, but the ratio we're speaking here is between the long pair and the short pair and the price difference. That's a ratio. So here's the mean of it at 0, and then we set parameters of 1 and 2, sorry, between 1 and -1, which essentially is the short and the buy of the buy and sell signals, and that's what we generate in this right here, the buying ratio between the two pairs, as well as the result of the exit position and the entry, which still needs to be studied. Lots of tweaking here, but this is the general logic of how this works and what this chart represents, just so you know. And I just wanted to let you know about that. And we shall talk to you soon. Have a good day.